Global markets on this Friday are trading in a more cautious two-way fashion after a volatile week, with the macro narrative shifting from a one-way risk rally toward a more balanced and event-driven setup. The dominant theme remains the Middle East, where the fragile U.S.-Iran ceasefire has come under strain following renewed exchanges, reinforcing the view that while de-escalation is still the base case, geopolitical risk remains elevated and capable of quickly reversing sentiment. This has helped stabilize oil after its sharp pullback, keeping the broader focus on energy, inflation, and central bank implications. In FX, the US dollar is attempting to stabilize after a sharp sell-off earlier in the week, with price action turning more range-bound ahead of today's key U.S. nonfarm payrolls release. High beta currencies such as the Australian dollar are consolidating near recent highs, supported by the earlier improvement in global risk sentiment, but capped by softer domestic data and a more patient stance from the Reserve Bank of Australia. The euro continues to trade largely as a function of dollar direction, while the Japanese yen remains volatile, holding firmer on the back of intervention and lower yields, but still facing structural headwinds from carry dynamics and elevated energy costs. On the equity side, global indices are holding near highs, but with reduced momentum as investors show signs of caution ahead of the key data and ongoing geopolitical uncertainty. The earlier rally was driven by falling yields and easing inflation fears as oil declined, but the reemergence of geopolitical tensions is limiting follow-through. In commodities, oil is stabilizing after a sharp drop as markets reassess supply risks, while gold remains elevated, reflecting ongoing demand for hedges despite the broader risk backdrop. Looking ahead, the focus is squarely on the U.S. nonfarm payrolls report, where job growth is expected to slow sharply, with the unemployment rate holding steady and wage growth ticking modestly higher. This release will be critical for shaping expectations around the path of Federal Reserve policy, particularly after recent volatility and inflation expectations linked to energy prices. The broader takeaway is that markets are entering a more data dependence phase, with direction likely to be dictated by the interplay between incoming economic data and the still fluid geopolitical backdrop. That's all for now.